Hello and welcome to Portfolio Matters. And we have a treat for all our viewers today because we have a Discord and community member, Lee, coming on to share his worst trade in Sirius Minerals. Now, I really love these and they always teach me something. But before we get into it, Richard will read the disclaimer.
Thank you, Keith, and hello, Lee.
Hiya.
Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. The views of any guests we may have on the show are entirely their own and may not be representative of the views of Portfolio Matters. A full disclaimer can be found at the end.
Okay, take it away, Lee.
Right, first of all, thanks, guys. Just like to say, the channel is fantastic, and I really appreciate the efforts you guys put in, especially for the weekly update. That's about the best, concise information that I've found on the entire website. It's brilliant. Right, so just a little bit about me before we talk about my disaster with Sirius Minerals. Started investing basically back at the 90s, just as the dot-com boom was taking off. Read the Jim Slater books, ended up getting the paper copies of his pegs and all that kind of stuff. Investors Chronicle, and ended the decade beautifully with the lastminute.com IPO, which most people know as a complete washout. Then after kept an eye on investing, but never really had the money to actually sort of do anything with it properly. So started in 2016 after inheriting some money, dabbled a bit more then. And then after being made redundant, after doing a couple of years of investing, I took my pensions out and I started created my SIP and have been investing ever since, basically. I've said there that I took it very seriously into 2018 after taking my pension out, and obviously after last year when March hit and the pandemic struck, obviously losing 25% in about 2 weeks, that made me take it even more seriously. That's obviously gone on and worked well for most people over the last year or so, so I now look after the wife's SIP as well. Okay, so Sirius Minerals, who are/were they? This was, they plan to mine the world's largest known high-grade polyhalite, which is essentially fertilizer, which was a deposit that was found in Yorkshire, which was supposed to be the biggest. The idea was everything was going to be buried, minimal impact to the environment, so you couldn't see anything. There was 2 great big long mine shafts at 1,500 meters, and it was all going to be transported 23 miles on a conveyor belt underground to the port where it would be shipped. All sounds nice and simple. 100 billion economic benefit over 50 years, and it was bigged up by pretty much everyone, the analysts, the government. It was all going to be a fantastic advertisement for what Britain can do, or was it? So why did I invest? So I'd actually dabbled a couple of times with this share over the years when it first came to market, and just dabbled in and out, didn't really make any money. And then when I started investing seriously, if you like, I bought on the back of a big drop. I'm a bit of a value investor, and I have this tendency to, if I see a share that's dropped a lot, I have this horrible tendency sometimes to think, oh, hang on a minute, this has already been at 45 pence. Maybe if I get back in at 25 pence, I'm going to double my money quickly. So the other big issue with this, or the big thing for this, was that I believed the story. The fact that it was a mining company, not in Africa or Asia. This was in Britain. It had been backed by the government, and it was going to be a long-term investment for me. I was going to sort of make lots of money as they started pulling all the mineral out, etc., etc. And I think the key thing is that essentially deceived by the fact that it was in the UK, and therefore my perception was that it was lower risk, and almost forgetting the fact that it needed billions to actually get off the ground in the first place. As I said on there, it was talked up by the brokers. It was mentioned. I remember at the time Brexit was all going through, and this was regularly mentioned in the House of Commons as part of the Northern Powerhouse, which was a big thing a couple of years ago. I guess the problem I had with a lot of these shares is that with this one in particular, I chased any perceived good news, or with my bias of good news, with more share buys, and any drops was an excuse to average down, which obviously is probably one of the worst things you can do, the old falling knife syndrome. I didn't take decisive action as well. There were points where I kind of ignored all rational thought and just either bought more, or towards the end just sort of did nothing, which was, again, sometimes is the worst thing to do with the share. Again, the rabbit in headlights scenario as well was playing out. And then when it actually did get bought out for 5p, I'd actually sold half my holding at about 3p about a month before. So my timing was impeccably bad throughout as well. So it was a complete disaster all round, really. I mean, I've put there that I was blinded by my bias towards the story and not the fundamentals or the risk, which is, I guess, the complete sum up of what happened to me, really. Yeah, this is just to underline the fact, what could possibly go wrong when you actually look just at that one picture and you think, no wonder it's going to take 5 or 6 billion to get going. I mean, this was, drilling down to sort of 1,500 meters in the first place, which I think was going to be the biggest or the deepest sort of mine shafts for decades, if not forever, in the UK. And then on top of that, making that tunnel 23 miles long underground. I mean, just wherever it is, that's going to take a hell of a lot of cash and is a serious risk. So just a quick timeline of what went on sort of between 2015 and when it got taken over by Anglo American. The things in white, which are the highlights, are probably the key points. So I'll just concentrate on those. So November 2016 was when it launched its stage 1 and 2 financing. And for stage 1, it issued 400 million in new shares and 350 million pounds in convertible bonds. And I remember at the time reading about this Gina Rinehart, Australia's richest woman who had invested and made a fortune, I think, in mining over the years. And she put in 245 million. So again, for me, that was a signal that, this is, how can I lose? If she's sticking in this amount of cash, this has got to be a great investment. As it says, they moved on to the main stock exchange market. And then part 2 financing was to unlock the main part. So stage 1 was done. That was just a sort of a few hundred million to get them actually in the ground. The big part of the financing was this 3.3 billion fundraiser, which they had to do. And part of that was trying to unlock this revolving credit facility, which JP Morgan had put up. So they needed to raise money to do this. And to raise money, they did a placing. Now, bearing in mind, I think the shares at the time were 20 something pence. They put the placing in at 15p, and I think that caused a bit of a 25% share crash, which we can see on the graph in a minute. But this was the first issue. This was the first kind of warning signal that I should have looked at and thought, hang on a minute, you better step back a second here, Lee. And I didn't. I just saw it as, okay, we've got to raise the money. So I think I actually bought more at 15 pence as part of the placing. And then August 2019, it's just a few months later, they actually postponed that bonds that they had to raise the money for to unlock the credit facility. And they said that they were stopping it because of tough market conditions. Now, obviously, this was coming up. This was Brexit and all the sort of stuff that was bubbling around with that. But the tough market conditions is one way of describing it. But I mean, they were offering this bond at something like 13% interest or 13% yield. And this was partly because the government refused to guarantee it again. So the Northern Powerhouse was beginning to unfold, and all this rhetoric in the Commons kind of just died a death, basically. So literally a month later, the Woodsmith mine construction plans had to be shelved because of this bond offering couldn't go through. And it says the uncertainty around Brexit. But I mean, essentially, it was the government just refused to back it. And if the government refused to back it, they couldn't actually get the initial 400 million. They couldn't get the initial 400 million in turn, like a house of cards falling down. It means they couldn't get the 2.5 billion credit facility from JP Morgan. So it just kind of stayed there. It stayed there, after it had crashed 2 or 3 times by now, and it just stayed there doing nothing, continually drifting down until eventually, sort of the beginning of 2020, Anglo American made an offer to take it over at 5.5p a share, which was accepted by everybody. So that was the sorry state of the timeline, really. I mean, it's probably worth mentioning there as well that this share because it was a UK share and it was seen as the Northern powerhouse, a hell of a lot of retail investors got in on this. Not perhaps people like myself who you'd hope would know a little bit about it, but there was a lot of people that had never invested in shares before, probably going back 30, 40 years, or maybe they might have invested in companies like British Gas when they went. But there was a lot of small investors who put money in this, believing this was going to make them a fortune, especially the guys and girls that were local to where it was happening up in the northeast. So they lost a lot of money, some people. Okay, so this is the sort of one-way downhill ski of a share chart. If we just step through it, you can see where I've made the mistake. So this first crash is where I mentioned that the stage 2 funding, the first crash is where stage 2 funding requirement was deemed to be about $500 million more than they originally thought. That spooked the markets and it dropped by 26%. And then I remember watching the share around about then thinking, oh, this has been up to 40 odd pence recently. They're going to get the financing, because I was convinced that was going to happen. So I started to buy, and I started to buy as it went down 2 or 3 times before finally, I think if you just skip to the next couple. So I'm buying at 23p, 21p, 20p, 20p, thinking this is all good. I don't mind this. It's going to go up. And then there was this alternative finance proposal, which I remember Sirius, I think in their communications, were basically saying that, oh, we're looking at this alternative finance proposal. It's looking good. We're going to put on hold all these other bits of finance that we were looking at, which meant, I think initially it was going to be like 2 or 3 different parts of financing they were trying to put out there. And they'd come up with this proposal which would get rid of all that, and it would just be all in one lump. So it was seen as really positive by the city. And so I thought, oh, great, I'm vindicated. I remember the morning when that was announced, and I remember thinking, this is going to come good now. I know that I'm going to make money. I can see how well I've done. I remember the exact moment thinking, brilliant. Not for long though. Yeah, I'm so smart. So I started buying more, even though the share price dragged down just a fraction. I thought, well, I know this is going to work. I know this is going to work. I started buying more shares between 18 and 23p. This was where very shortly afterwards the placing was announced at 15 pence, and that was, as I mentioned earlier, that was my first proper missed opportunity to sell and just say forget it. I should have just gone out. I should have looked at it then, reevaluated the entire story, and just thought, what are you doing? If it's, why do you think it's now going to go up? Bearing in mind that they've still got to find £3.5 billion, and all I'm doing is thinking, well, I just need to chase my money back up. They're going to get it. They're still going to get it. So I bought into that discounted placing as well, which is a stupid thing to do. But again, I was just believing the fact that it was going to work. And again, you can see there, even more buys as the share price drifts lower. I've bought in at the offer price of 15p, and then as the offer price just kind of moved up, and the price after that just kind of moved up and down a little bit, I bought some more, just biding my time for when that financing came in, which of course it didn't. So again, this is probably the second time where I remember exactly the morning when I woke up, picked my phone up, checked my value on Hargreaves Lansdown, and saw, why have I lost more than I thought after waking up at 8:05. Looked at Sirius Minerals, saw what had happened, and did nothing. I just looked at it and was literally, I can remember just feeling like a rabbit in headlights, completely spooked by the fact this has not worked and it's been a complete disaster. But I didn't sell. I didn't sell. I should have just said, forget it, sell, cut your losses, but I didn't. And then I watched as it went up a little bit more, thinking I made the right decision. It's been vindicated. And then realizing that actually, when it got to the point when it got back up to sort of 11, 12 pence, thinking I've just got to hold on now. And then saw that the bond was scrapped. And then that's obviously when it dropped down to 5 pence, or lower than 5 pence. And that was the only time that I actually decisive. Well, I say decisive. I still didn't sell everything. If it had been decisive, I would have sold the whole lot and just given up and punched myself in the head. But instead, I sold half at 3.2 pence, thinking it's just going to go bankrupt. And I just kept the other half just on the tiny hope that something good would come out of it. And I guess But I don't know if you could argue Anglo American buying it at 5.5p is good, but it was better than 3.2p. So it was, and that was it. And that was the end of the sorry tale from my point of view. As I understand it, Anglo American are still continuing with this and still throwing money at it, but it's going to be a long way before anything comes out of the ground. And I've not checked Anglo American shares actually to see what happened there. But it was, yeah, an interesting saga played out over a year. And I think, as I mentioned to you guys when I first agreed to do this, it feels like it was a lot longer in the past. I think I must have compartmentalized it somewhere in my brain where I don't try and refer to it very often because it was, such a horrible experience. So, yeah, just to go over the lessons learned. So, I mean, there's key things that any sort of amateur investor really should sort of know, but it's easy to forget them, and that is reevaluate on the bad news and start from scratch. And if by starting from scratch you realize that I wouldn't invest now, then don't invest and sell. There's no point in keeping something that you reevaluate that you think is actually going to be go down in price or lose your money. And the same thing for averaging down. You can average down. I can see that there's reasons sometimes to average down, but I think you need a bloody good reason to do it. It shouldn't just be something you do just because the share price has dropped. Again, it's about reevaluating. If you still think the fundamentals are there, then averaging down might well work, especially in if the market's going down generally and you're in what you can perceive to be a good company. And then, betting on holes in the ground, making sure they are less complicated. I'm not a massive investor in mining, and I think that's part of the reason I came across you guys, because I know that you do such detailed analysis, and I know that my analysis when I bought the share was not detailed at all. It was really about the story and not much else. But I think it's such a danger sometimes betting on holes in the ground, and especially with one that is complicated as this, with as many areas where it could all go wrong, and you just know that it's going to burn through money. So yeah, for me, I guess one of the takes was wait until it's actually taking stuff out of the ground before investing, because if it's a good investment over the long term, then there's no harm in waiting until it's starting to take stuff out of the ground, and you may miss that first big spike up, but you're probably still going to make money in the long term. And then the key thing on this one was, as I said at the beginning, it's about how I was blinded by the bias of the story rather than the actual massive risk. Had it been anywhere else, I know I would never have even looked at this company, but the fact it was in the UK and the fact that it was bigged up and it was part of the Northern Powerhouse, I just couldn't see how it would not go through, but it didn't.
Well, thank you very much, Lee, for sharing that painful experience. I mean, frankly, we've all had them.
Yeah, absolutely.
It actually really reminds me of my worst trade in Hurricane Energy, where I just held on, and I bought more because I fundamentally believed the story. And I actually, when you put up your lessons, I thought they were really good. It's stuff that we all know. But actually, we still don't do it. I mean, I still average down, even though I shouldn't, because when I believe the story. And when you say you have to, is buying on a downtrend ever a good idea? I mean, that is just so true. And yet I continue to do it, even though I know I shouldn't.
Well, I was listening to a webcast that had Eric Sprott in it the other day, and one of his investment strategies is obviously he invests in all sorts of holes in the ground, but he buys on good news. So he waits for the price to go up effectively, and then he buys. And I think that's a really good strategy, because you're not preempting. You're not saying, I know they're going to find good news. You're waiting until they've actually found it. And the other thing is, I mean, as Keith says, we've all been there. And I was watching what you were thinking. You're thinking, I know what you feel. I know how you were feeling then, Lee, because, I think, we all know there's anchoring bias and all these psychological biases. They don't mean anything. So I think one needs to have a couple of simple rules, and you just follow those simple rules. And one of them that I now use is I watch the Fibonacci retracement and I watch the moving averages. and you don't miss very much by waiting for the moving averages to turn up, things like that. So, but it's and it's it's great to hear you talking through your feelings as you were doing it, because that it just it makes you feel so horrible. And if you sell, you are acknowledging that you have lost money. If you hold, you have a hope.
Absolutely.
And actually, when you were saying at the end you were kind of made a mistake selling at 3.2p, I don't think you did at all. The thing is, I was absolutely amazed that Anglo American bought it. And I think the other thing that I thought was very interesting about your talk is when you're saying you got out of it and it seems a long time ago. Actually, getting out of a failing position is just a wonderful sense of relief, frankly, because it just does take up a lot of your psychological space. And you think because I think a lot of the reason we kind of continue to buy as it goes down, and actually I've got a position I'm going to start trimming after this, but because I'm doing exactly the same thing, is that you still believe in the story when it's going against you, and part of the reason that you're buying is you desperately want to be right. And actually it's getting away from that and saying, and this is going against me, I'm wrong, I can always get back in. Because one of the things George Soros used to do was occasionally he'd phone up his broker and say, sell everything, I want you to buy all my positions, and then over the weekend he'd go away and think about the ones he actually wanted. Now I had a couple of points. Actually, I liked your point about being a value investor and thinking, the share price has come down, it's better value. I mean, frankly, I'm exactly the same. And but I remember the great book Reminiscences of a Stock Operator by Jesse Livermore, and he operated before the SEC came in. And the way what he would do is he would ramp shares. So he'd get the share price up and he'd say, you don't sell the stock on the way up. You sell all the stock on the way down from people who've seen the share price at 100. And when it gets to 80, they think it's a bargain and they buy all the stock he'd bought at 40. And, I thought that was a very interesting point. Now, I was very well aware of this story and I didn't get involved, but precisely because of the financing. And actually, I remembered Eurostar. And, I saw these huge tunnels and I thought, this always overruns by double, frankly. I will wait and see what happens.
I think Keith put his finger on it a few minutes ago when he said that you can always buy back in. And if you do buy back in, you're probably going to be buying back in because of good news. And you may lose a little bit of profit, but you gain a great deal of certainty and reduced risk.
Absolutely. And I think that's key, but that's what's happened since the pandemic, isn't it? You've watched all these stocks crash with the pandemic. It's all been kind of compressed into years have been compressed into months, and you watch the cycle of some of these shares crashing, and then you just know that there's no way are they worth what they are at the bottom. You can just buy in and watch them, wait till they start to uptick, and so many shares have just carried on going and sort of doubled over the last year. It's almost been easy pickings. Well, in theory, it's been easy pickings. I've still picked some wrong ones.
Okay, well, thank you very much, Lee, for coming on and sharing your experience with us. I mean, I think these are really, really useful for people who are new to trading, and because this is real experience from real investors. So I hope you all enjoyed that. Thank you for watching. If anyone of our viewers has a similar experience, we would love to hear it. You can get in touch with us via the email or via our Discord channel. In the meantime, please can you press like and subscribe. And thank you very much for Lee for coming on.
Cheers.
Thank you very much, Lee.
And it's goodbye from us all.
Goodbye.
Bye.
Bye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.